Hello and welcome back to the channel. Um, there are certain developments happening within the telecom industry, and a lot of telecom industry was really muted in terms of its performance and the way it was operating. And a lot of telecom companies have debt on its book. So I really wanted to focus and bring back from one of my earlier videos, one of the companies which I have a favorable view on. I'm still developing my views on this. But I really like the way the business is structured. I like the way if you want to really get involved in the telecom sector and purchase a stake within the telecom sector, given the high debt and the way some of the structure is really panned out for the telecom sector. For example, Vodafone, as we know, is going through real debt problems and has a lot of debt on its book and a lot of debt repayments to make. Um, Today, the company in focus will be Indus Towers. This company, essentially, the way it rolled out was in 2000 and 2001. All the telecom companies were operating their own tower companies. Currently, BSNL and MTNL are still operating their own tower companies, but the private players were smart enough to realize that instead of operating your own tower companies, we are better off sharing the same location and also spinning out it out of the balance sheet into a separate company. So there used to be a company called Bharti Infratel, and even Reliance had its own tower network. But they soon realized that it was really beating down on its margins and costs, and taking care of both telecom and tower operator was a huge problem. Currently in India, we have 900 million people who have access to telephones, which is 3 times the population of the United States of America. We have a transitioning 5G rollout. So within a tower, if you have 4G, and even the transitioning of 5G requires a big push towards infrastructure. It requires a push towards infrastructure, and any tower company which is existing is really benefiting from the expansion into rural areas as well. So that is something that is playing out right now. And Indus Tower, just I think Vodafone just sold stake close to $2 billion worth of stake in Indus Tower to be able to pay its debt. And the response to the share was muted for Indus Towers because of how Vodafone was doing, because Vodafone being one of the key parts of the company, and majority a lot of its stake is owned by Bharti Airtel, uh, but even Vodafone is a so 80 close to 80 to 85% of the business comes from Vodafone and Bharti Airtel for Indus Tower. What Indus Tower has also done is it has begun collaborating with military establishments and educational institutions to set up networks and get into those business. And also what it's doing is beginning to innovate. So earlier a tower was really operating on the basis of diesel fuel, and now with the innovation of solar technology and different types of lithium ion and those kind of technologies, Industar is really transitioning into that. So that should hold well in terms of the margins. This I think this session will just quickly have a glance through as to what the numbers are looking for Indus Towers. So Indus Tower currently has close to um, 200,000 plus towers across India, and it's really a kind of oligopoly company, because these tower companies, the way the business is set up is it approaches the landlords, and the landlords pay money to Indus Tower, and Indus Tower operates the network or the tower on the behalf of Airtel or Vodafone. So and these are long-term contracts. So these are 15, 20-year contracts which are signed out. And so the cash flow, if you will go on to see within the financials, is quite stable. And it's a kind of business which really came into my focus when I was looking at America, like looking at one of the big investors in America, Mr. Monish Babra, and he telling about American Tower. American Tower also had its presence in India, and its primary exposure was Vodafone. So American Tower sold its stake to Brookfield in Jan of 2024. Brookfield is a Canadian company which has exposure majorly to Geo. So it really thought that it was in a better position to handle um, handle its affairs, because at that time Jio was really doing really well, and it still is. And it had huge exposures to Jio. So Brookfield is now one of the largest telecom operators, telecom tower operators in India. And Indus Tower is close second in terms of percentage. I think you can Google it and see, but I believe it's close to 40%. And this will have significant value in terms of how the telecom companies really pan out, because a lot of people keep asking about whether Vodafone Idea is a good buy. Is um, it has huge debts on its book. It probably is a high risk, high reward scenario. It may not even yield rewards, but this company is kind of really has a barrier to entry in terms of the way it's structured, and the way the tower companies across the world, the way they operate. So China Tower is one of the largest tower companies, and is really kind of a monopoly within China as to how it conducts its affairs, and the financials are very, very strong. So here we can see that the market cap of the company is close to 1 lakh crore. Brookfield sold its stake to American Tower sold its stake to Brookfield for $2 billion. So that works out to close to 15 to 16 thousand crores. So in terms of that, the market cap looks a little inflated. But when you do see the price to earnings in terms of the earnings that the company is really generating, with the muted earnings, with the muted repayments that have been coming from Vodafone, and now it's beginning to speed up. It's at 17. The industry PE is close to 20, so it's pretty close to the industry PE. But if Vodafone really begins to pick up, and Vodafone has shown intent in the 5G rollout and really clearing out its debt, and the government has also been very supportive in terms of AGR dues and really phasing it out in terms of packages, and giving it time to really repay. So if it does come up, then this stock is one to watch out for. In terms of ROE and ROCE, we can see that it's at a very healthy percentage at 25 for ROE and 20.2% for ROCE. So in a way, it's nicely structured. Something that I don't like here is the pledge percentage, 30.5%. But really, it's for the 5G rollout, the capex plan for the company is close to 9,500 crore to 10,000 crore. So that would also contribute to the pledge percentage. And also the tower companies have really become quite favorable in terms of how the government is looking at it, because it has allowed 100% foreign ownership in tower companies within India, subject to approval from the regulators. And also it is also beginning to get soft loans in terms of at a very low rate. So that is quite favorable for the tower companies as well. Promoter have a good chunk as to 69%. Here you can see that the profits, the volume of profits is huge, so it's close to 6,000 crore. It it has a debt of 20,531 with a debt to equity of 0.76. Is not paying dividend out, which is quite understandable in the sense that 5G rollout is really peaking right now, and the capex expansions do need to happen to increase revenue further down the line. And also some of the things that it's doing in terms of innovation, moving from diesel to solar and renewable energy. So that should further improve margins in the long run. Obviously, in the short run, they would have made investments to transition for that, and it I think in the next 7 to 10 years, really should watch out for this stock. So in terms of the price action here, we can see that it is quite muted. It was quite muted during the time when COVID, obviously there was a crash, and then it was quite muted in terms of how the price movement was really happening. Um, and then it really begins to rise. Like it was close to 174 in July of 2023, and right now it's 378. And primarily, I think the way the judgments have been coming for how Vodafone is going to be able to pay its AGR dues, and the stake sale by Vodafone within Indus, and some of the positive movements that are happening for Vodafone have been a contributory factor to why the price has been moving. So if you look at the profit and loss statement, it's generating a revenue of close to 28,000 crore with an expense of 14,000 crore. And also the thing that is happening is once the location is finalized, the moat of the business is such that once the location is finalized, you can keep adding network providers onto the location. So a lot of these expenses which have already been incurred will be followed up by exponential increase in revenue which have not been accounted for. Um, because one tower is already built, and once you keep adding network providers, so the expense will stagnate and the revenue will really beginning to flow through. So yeah, these numbers should pan out into the revenues and the bottom line as well later on. So the operating profit margin very healthy at 51%. You get very few businesses which have an operating profit margin of 51%. Um, uh, a lot of capex heavy industries, even to meet 15-16% would be a big challenge. And really, then the opportunity cost also comes into the picture, because if you're generating 16% of just OPM and then you have your depreciation, interest, and taxation to go, it really becomes a challenge to really make thin margins out of a huge chunk of revenue, which, if subjected to a little bit of volatile pressure, can totally erode the profits and the profit margins altogether. Here you can see that earning per share, it was at 5 rupees per share in March of 2013, and it has jumped 4 times as at March of 2024. In terms of the stock price CAGR, we can see that uh, the stock price has really doubled in this 1 year. And in the last 3 years, not too bad at the 15% CAGR. But I think some of the tailwinds that have been beginning to pick up are really being communicated by the 122% stock price CAGR for the 1 year. In terms of the compounded profit growth has been, so as you can see here, trailing 12 months, the compounded profit growth in itself has been 187%, which is quite stellar. And then obviously it's being translated to the stock price CAGR and those kind of things. And the return on equity has been quite consistent in the last 5 years and 3 years, and it's really picked up last year to 25%. So I'll stop here. Do let me know in the comment section what you think about this company, and um, what the future of this company holds, and any differing views that you may have, because I would really like to learn more about this business and form my opinion on it. I really believe that opinions cannot be final, because as you input more information, then your opinion should also change accordingly. I may like this talk, but moving ahead, it may happen that I also, in light of fresh information, decide to discard it. But do let me know if you agree with my, or you agree with my opinion on this, or disagree with my opinion on this. Obviously, it's not a stock recommendation. It's purely for educational purpose. Do like, share, and subscribe. Your subscription really keeps me going in terms of putting out more fresh content, which is different from a lot of the financial influencers that are there in YouTube, which have a huge amount of views, but don't really get into the crux of the business and trying to understand the business at more at depth. Thank you so much, and have a great day ahead.